All right, welcome back. You want to talk about a big call today? How about Morgan Stanley saying that JPMorgan could hit $1 trillion market cap, $1 trillion market cap by 2030? We've made it our call today. I understand it's a ways off. Brenda, who owns JPMorgan, what do you make of this call?
Well, I think if we look within the banking sector, JPMorgan is a standout in terms of being the highest quality name. They have a ton of diversification within their business. They've been investing a lot in technology and other things. It should allow them to continue to gain market share within the space. So to the extent that that continues, I think that they could continue to grow and potentially hit that market cap range, $1 trillion market cap range by 2030. But, it remains to be seen. Between now and then, we are likely to have a recession, which could certainly weigh on results. But again, just looking at JPMorgan, this is the highest quality company within the group, incredibly diversified revenue mix. So they should be relatively insulated from that. But that's our overall view. It's possible, but given the strength of the company, but not sure if it's necessarily going to happen by 2030.
Okay, so Jim Lebenthal, who owns it too, possible. Anything's possible. Is it probable? I mean, when you hear a call like this, as I said, you own the stock. Higher rates for longer is part of the thesis in making this call. They call it an underappreciated rate play.
Yeah, I'm not sure I agree with underappreciated, but I agree with the call.
You agree with the call?
I agree with the call, and you highlighted it's a long ways off, 7 years, to get basically.
It's not that far off, and when you really think about it, to get to $1 trillion market cap for a stock that's at $415 billion right now.
Exactly. So that's a mid to high teens annualized return. That's not what the market overall is going to give you. If, however, you believe the thesis that I was laying out before, all that industrial activity does need to be financed. That does inure to the benefit of the financial sectors, of which, as Brenda just said, JPMorgan really is the creme de la creme. Now, we can quibble about whether its valuation is exactly right now at roughly 1.5 times book value, higher than that in terms of tangible book, 3% dividend yield, 10 times earnings. But if the thesis that I laid out comes to pass, I think actually $1 trillion, 150% return over the next 7 years is very feasible.
Thank you for waiting until he finished to jump in, because I could tell that you really wanted to, Weiss. So now, please.
Yeah.
The stage has
so
been
it
cleared
was good
for you.
I had that pause, because I'm ratcheting back what I'm going to say, or maybe how I'm going to say it. But look, if the analysts set out to write a report to get people to talk about, well, obviously mission accomplished. In order for it to more than double, be up 250% in 7 years, a lot has to go right. I suspect during that period of time, Jamie Dimon is going to retire. So maybe not, right? Because we saw him yesterday. He's still got it all, still got the fire and everything, but maybe he won't be there. But you have to bet he's going to be there, because we don't know who's on the bench coming up behind him. Okay, we've seen some people on the bench like Staley, right? And what happened there? So thankfully he didn't take it. So the bet's got to be on so many things, and then you got to bet in the economy. You got to bet in rates. You got to bet on frankly, the government, the regulators allowing to be $1 trillion.
Which financial stock, now not necessarily hitting $1 trillion, because that may be a silly argument, but which financial would you bet on the most, irrespective of what market cap you think it could ultimately reach?
From a beta standpoint, I'd actually bet on Goldman, because Goldman is more concentrated in the higher margin businesses than JPMorgan. JPMorgan, to Brenda's point, has lots of diverse businesses which protect you in the downturns and protect you for these off cycles where there's no issuance.
So Jason Snipe, you got Goldman, right? Is that where you place your bet over the long term? If you had to pick one financial stock, which would it be?
It's wild, but I agree with Weiss here. Goldman was actually my stock summit pick, and if I think about the latest quarter, underwriting was down 48%. Revenues were down 16%. They're right-sizing the business as it relates to personnel. The retail play that they made hasn't worked out as they had intended it to do so, and I think that also is going to be catalytic to the stock. And I think IB will come back online. I mean, we're in a higher rate environment. You know, at some point that activity will come back, and I think Goldman obviously is the best in breed in that space and will benefit from that big time. So that's why I like the stock, and Goldman actually would be my pick as well in the space.
So Jim, I mean, you know, you called, I think you said crown jewel when talking about JPMorgan. Now, if you had to pick one of the three that you do own, you do own Goldman, and you own Citi, and you own JPM.
Yeah.
JPM's the crown jewel in your portfolio for that space?
So I may have chosen my words incautiously or incorrectly. It's the creme de la creme within the space. However, you pointed out my other picks. I do like Goldman quite a bit. Steve and I agree on something. The fun one for me is Citigroup, which is just trading at such a discount to the overall sector that I could see actually better returns there, even though it is far from the creme de la creme within the industry. I do want to point one thing out. I actually did the math, all right? It's actually a 14% annualized return over 7% to get to $1 trillion. Is that higher than the market average? Yes, it is. Is it outlandish? No, not if they execute well. Your point about Jamie Dimon is well taken. However, this is a sector that I want to be in, and the way I like playing it is to have the creme de la creme and a little dark horse here with Citigroup.
I'm just curious, and I don't know the answer to this, so it's maybe unfair to even ask it or bring it up, but when's the last time that these stocks have had that degree of annualized return for that long a period of time?
Well,
dare I say never, because honestly, I don't know the answer to that question, but I'm guessing not.
Without using the numbers, because I don't have the numbers in front of me, but you'll remember going into the financial crisis, and I know how that sounds, okay, but those 3 years going into the financial crisis, the financial sector was on fire. There's a hell of a lot wrong with what I just said.
Well, of course you're going to get a few years time.
You had 30 to 1 multiple there.
Of course you're going to get a few years time, but you need, as you said, 7 years.
But they're not structured. I mean, from a regulatory standpoint, they're so much different than they were before 08 because of 08. So you're not going to have that kind of beta in the group anymore because the capital controls are so tight.